More analysis of what was moving the markets. Julia Lee joins us from Bell Direct. Julia, end of earnings season really, and a really positive finish for the week too for the Aussie share market today.
Righty, it's the end of the week, the end of the day, as well as the end of the month and end of earnings season finally. We've seen the market up by 0.7 today, and for the week a gain of 4.6%. If we have a look briefly at the earnings season so far, I guess it's been a pretty good earnings season in the respect that most companies have managed to beat expectations. We've seen about 20% of companies that have reported missing expectations, but overall, if we have a look at the decline in profit, it's actually the biggest decline in profit that we've seen since around about 1990. So if I bring up the share price graph of the ASX 200 over the past month, this is what it looks like, and over the last month it's been a gain of around about 7%. So the market's certainly supporting that earnings season that has just passed. If we have a look at the market today, the best sector on the market was the energy sector, and that was after oil prices increased overnight. If we have a look at what's happening to oil prices, let me just bring up the chart of oil prices, and this is in 2009, and this is what it looks like. This week, a lot of the oil movement was on technical movement, so on the charts. We saw oil prices hit 75 US a barrel and then pull back from that 75 US a barrel mark, and then overnight hit 70 US a barrel, so the bottom end of the range, and then jump up from that 70 US a barrel mark to close just over 72 US a barrel. So it does look like the challenges for the oil market in the near term are 75 on the upside and $70 on the downside. Because of that rise in oil prices overnight, we did see the energy stocks having a good day, except for Caltex, which was down after its result. But the worst sector on our market today was a property sector, and that's not surprising given the good run that we've seen in property this week. So we saw a bit of profit taking coming in today. All up, the market doing very well. If we have a look at the target for the market at the moment, I guess that 4,500 mark for the S&P ASX 200 is the area to break before the market is free to move upwards on the charts.
Looking at Caltex shares though, one of those that were really sold off, what was wrong with its profit numbers that the market didn't like?
Friday, there wasn't anything wrong with its profit numbers. In fact, it came in line with its June guidance, and it's not surprising that Caltex came out in line because their last guidance was only back in June. Now, if we have a look at Caltex, they were predicting that on a historical basis, they'll see a result between $335 to $365 million. The actual result came in at $362 million. So on the upper side of that band. If we have a look on a replacement cost basis, they actually beat their forecast by a little bit. It came in at $298 million, and they were forecasting between $270 to $295 million. Now, I guess the second half it is going to look quite weak, but they've pre-warned of that back in June as well. But what really took some of the people in the market by surprise was the cut in dividend that we saw. The last corresponding period, we saw a dividend of 36 cents, and while we knew that Caltex was going to have a more conservative dividend policy, I don't think a lot of people were expecting a zero dividend in terms of the interim dividend, and that's certainly what Caltex did. A little bit of speculation on why that may be the case. Some people speculating it's because it's going to be a weaker second half, but mainly it's because of the mobile acquisition and paying for that through cash flow. So it does look like they are looking to fund acquisitions through that cut in dividend, but today wasn't a good day for Caltex. If we have a look at Caltex's share price, this is in the last 52 weeks. Their shares have been rising steadily since the end of 2008. So today we did see a bit of a pullback, down by almost 6%, but for the year, Caltex doing pretty well so far.
What about Harvey Norman? Now, that was a stock that really did well today.
Harvey Norman was a standout. We saw a massive rise, a rise of just under 17%. We have a look at Harvey Norman's share price. This is for the last 52 weeks. You can see the jump that we saw today, and it was very much a vertical climb. It was in fact the highest point for Harvey Norman for the year. So the shares recovering all of the losses in 2009 and reaching the highest point for 2009 and the highest point in a year. Now the profit result, if we have a look at it, it actually declined by 40% to come in at just over $214 million. That was above consensus. Most brokers had a target below that $200 million mark, or around that $200 million mark, so that was a positive. Also, the commentary coming through was quite positive, and that's what the market likes to hear. If we have a look at what areas have been doing well and what haven't been doing so well, it was quite surprising. They said that New Zealand is outperforming, and that's something that we don't hear very often these days, but Australia and Ireland remain challenging. We have a look at the different categories and the different division. It looks like they are growing market share in every category, so that was a positive as well. But a stellar day by Harvey Norman, up by almost 17%.
Very good rise there, and a great wrap from you too, Julia. Thank you very much for that. We'll speak with you on Monday. Have a good weekend.
Thanks, Bridie. Have a great weekend.